Greetings everyone. In this video, we are about to get a major update regarding the military escalations in the Middle East. How is that going to affect the global markets, including the S&P 500, cryptocurrencies, and most importantly, how the spike in the price of oil can actually trigger a massive liquidity crisis. In other words, a reverse in the carry trade in Japan is on the table. So we have no time to waste. The situation in the Middle East is not getting any better. And it's really difficult to get the big picture because apparently mainstream media is not telling us the truth. So I did my independent research. I gathered some important footage from the last hours. I'm about to display that on the screen. And afterwards, I will provide an update about the financial markets, including gold, silver, S&P 500, XRP, BTC, and most digital assets. How is that going to affect your portfolio? We're going to discuss multiple scenarios, including a liquidity crisis, so let's get started.
Oh my god. Whoa! Whoa! Holy shit! Oh my god! Yo! Yo! No way! No way! No way! Oh my god! Oh my god! Oh, holy fuck! Oh my god! Oh my god! Oh my god! Oh my god! Yo! Oh my god! Oh my god! That's retarded! It actually hit right here!
As you can see, the military tensions are not getting any better. So this is the S&P 500, is still near all-time highs. By the moment I'm recording this video, is actually up 0.18%, which is quite surprising. And the big question is, how is that going to affect the crypto markets if we have a remarkable correction on the S&P 500? So by the time I am recording this video, the S&P 500 is kind of looking flat. But if we have a major correction, something of this magnitude, I am 100% convinced we could see BTC below $50,000. To this moment, the S&P 500 is holding surprisingly well, but don't get fooled. That can change in the blink of an eye. So let's quickly jump to BTC. By the time I am recording this video, BTC is trading below $69,000. So as you can see, it did try to break $70,000 before. It has failed to break $70,000. Which is the short-term resistance level on the chart, which was previously acting as a support level. If we want to see more upside action, it's critical that BTC breaks $70,000. So far, it has not been successful. And on the short term, BTC has to defend $64,000. Losing $64,000, we could have a new apocalyptic zone on the charts. And honestly, there has been a major spike in volume at this area here, $64,000. So with high volume, it comes great responsibilities. And I have to be very honest, this for me looks like a fake out, especially because we don't have an improve in overall indicators. This breakout has not convinced me we don't have a major spike in the open interest. Actually, as you can see, open interest keeps decreasing. We have no change in the open interest at all. This signals that there are not big players actually bringing a lot of liquidity to the markets. We are still operating under a low liquidity environment. When it comes to XRP, the situation is quite similar. XRP is still following BTC. We still don't have a clear bottom. My ideal buy levels are still here around 70 cents. This would be my ideal buying scenario to actually increase my bag substantially. Ideally, XRP should reclaim $1.60, but I don't see that scenario happening in the next couple of weeks unless something substantial happens in Japan. I'm going to discuss that scenario in a second. We are still here. No man's land, no improve on the overall indicators, still trading under a low volume environment. So until this scenario doesn't change, I can't come here and tell you that I am bullish on the short term. Of course, I remain bullish on the mid and long term when it comes down to XRP, but there is one final scenario that I want to discuss. As you can see, gold keeps rising, so the more geopolitical and military tensions, the more the price of gold is set to skyrocket. And honestly, military escalation in the Middle East is bad for crypto. It's bad for risk assets in general. It's bad for fiat currencies. The US dollar keeps losing its purchasing power. So although it's bad on the short term, we all know that XRP adoption requires a change in the global economy. XRP success depends on the failure of the current financial system. The price of oil is going up substantially because of the disruptions in the Hormuz Straits. This is the highest price of oil it has been since July 2025. And here's the deal. A substantial increase in the price of oil can lead to a reverse in the carry trade in Japan. And as I record the video, the tensions in Hormuz are rising by the minute. So there is a high chance that the price of oil is going to skyrocket in the next days to come.
Friday was in Texas talking about energy. Let's discuss how the U.S. and Israeli strikes on Iran could impact global oil supplies and what that possibly means for your wallet. Joining us now is Managing Director of Clearview Energy Partners, Kevin Book. Kevin, good to see you. You look at the gas prices right now. AAA average gas price is $2.98 today, $3.11 1 year ago. But there's a AP headline that potentially oil prices set for swings next week as the U.S.-Israel strikes raise supply uncertainty. Is there uncertainty in the supply? How do you see it?
There is room for uncertainty for sure, Brett. Good to see you tonight. There are a couple things to think about. The first is what the extent and duration of the conflict might be. The second is what the offsetting impacts might be from countermeasures available if there is an interruption. In terms of the first question, tomorrow morning, OPEC will be meeting and looking at the possibility of adding back supply to the market. If there's risks of a big disruption, they might be willing to add more in advance.
Yeah. And, I read that Iran exports something like 1.6 million barrels per day, and most of that to China. We saw what happened in Venezuela, also a supplier to China. I mean, is this potentially putting a big pinch on China?
Well, China's been a buyer of last resort for sanctioned barrels, which sell at a distressed price, a discounted price. And cutting off one supply from Venezuela and then potentially cutting off another supply means that they're going to have to buy barrels somewhere else at a higher price. That doesn't necessarily mean they don't get access to crude, but their refiners have less favorable economics when they do.
We don't see that much of a retaliation. In fact, U.S. officials have told me they were surprised that maybe it was even half from the Iranians so far, at least so far. But one of the things that was threatened was closing off the Strait of Hormuz. If that happened, and it doesn't seem like the military presence in that area is going to allow that to happen, but if something happened there, that potentially could be disruptive.
Extremely disruptive. We could be talking about mid-double-digit increases in prices per barrel, maybe $25 a barrel or up, which would translate to something like 60 cents at the pump per gallon if it were to happen. But if it were to happen, there's a lot of questions about how it would be done, how long it would last, and whether it would be in Iran's interest to do it. That's the sort of thing that would only happen if the regime on its back foot thought that it faced an existential crisis and it was the only way out.
So here's the deal. Despite the fact that this can drag China into the war, which can make the situation even worse, The spike in the price of oil creates more uncertainty on the financial markets and once again can trigger a massive liquidity crisis. And here's the problem, Japan gets hit harder because Japan does not produce any oil. So for the past 2 decades, the Bank of Japan kept interest rates extremely low, in some cases even negative. That means people were paid to borrow money, which is just absolutely insane. When the price of oil rises substantially, the Bank of Japan might inevitably be forced to raise interest rates. Energy becomes more expensive and inflation rises inside Japan. So any tensions in the Strait of Hormuz can lead to a reverse in the carry trades. And this forces the Bank of Japan to increase interest rates to protect their currency. This makes borrowing the Japanese yen no longer free money. This breaks the carry trades, forces investors to close positions, buy back Japanese yen, and reduce global liquidity. This is precisely the scenario that can create a massive liquidity crisis. And there are 2 assets primarily designed for a global liquidity crisis. That's XRP and XLM. And here is what everyone's missing out. The liquidity rails are ready. This could be the flip the switch moment that leads to XRP adoption. Ripple Treasury alone processes trillions of dollars in payments annually. That's not yet happening through blockchain rails. We are just a couple of weeks away from regulation. The Clarity Act is about to be passed in the United States. With regulation in place, liquidity rails ready, the technology is ready, we have all the elements, all the pieces of the puzzle for a massive XRP price explosion. XRP is the invisible plumbing of the financial system. And in order for XRP to succeed, the current financial system, as we know, has to fail. And that's happening in real time. This is why I remain bullish on XRP adoption, and this is why I don't care about short-term fluctuations. I focus on the long term, I focus on XRP adoption, and it really seems that every single piece of the puzzle is coming together. Everything is aligned for a massive XRP price explosion. Thank you, everyone. Let me know if you are bullish about XRP adoption. I'm gonna see you in the next video.